Robert Kiyosaki says, "We are in global recession," warns of soaring bankruptcies, unemployment, homelessness. The famous author of the best-selling book Rich Dad Poor Dad, Robert Kiyosaki, says that we are in a global recession. Warning of soaring bankruptcies, unemployment, and homelessness, he noted that there is good news for investors looking for bargains.
Robert Kiyosaki's latest warnings. The author of Rich Dad Poor Dad, Robert Kiyosaki, is back with more warnings about the U.S. economy and global recession. Rich Dad Poor Dad is a 1997 book co-authored by Kiyosaki and Sharon Lechter. It has been on the New York Times bestseller list for over 6 years. More than 32 million copies of the book have been sold in over 51 languages across more than 109 countries.
Kiyosaki tweeted Saturday. Q. What is worse than a Great Depression? A global recession, he added. Unfortunately, we are in global recession. Hang on. Rough landing for world. Bad news. Bankruptcy, unemployment, homelessness soar, retirements toast. However, the famed author pointed out there is good news for investors, elaborating, bargains are everywhere. Gold, silver, Bitcoin priceless. In July last year, Kiyosaki cautioned that inflation may lead to Greater Depression, noting that real estate is crashing and layoffs are starting. He also warned about hyperinflation and depression in April, predicting that the US dollar is about to implode. In May, he reiterated, bad news. Depression coming.
The Rich Dad Poor Dad author is not the only one concerned about a global recession. In September last year, the World Bank said the risk of a global recession in 2023 is rising as central banks worldwide simultaneously hike interest rates in response to inflation. In addition, the International Monetary Fund (IMF) has warned of a tough year ahead for the world economy.
Kiyosaki has regularly warned about the state of the U.S. economy while recommending investors buy gold, silver, and Bitcoin. He often said that he does not trust the Biden administration, the Treasury, the Federal Reserve, and Wall Street. He stressed that the Fed and the Treasury are destroying the U.S. dollar.
He tweeted on January 14 that Bitcoin, gold, silver, and oil are moving up in price, noting, "Good news for those that know inflation is permanent, now systemic, not transitory. Bad news for the uninformed, poor, middle class, anyone who believes Biden cares about them and their families." The famous author said in December that Bitcoin investors will get richer when the Federal Reserve pivots and prints trillions of dollars. He explained in November that he is a Bitcoin investor, not a trader, so he gets excited when the price of BTC plunges. In September, he urged investors to get into crypto now before the biggest economic crash in the world happens. Market strategist warns of blood on February 1 ahead of Fed meeting. Stocks, precious metals, and cryptocurrencies rallied during the first month of the year, and market strategists are saying that markets could retract in the near future if the U.S. Federal Reserve keeps hiking rates and maintaining a broader tightening policy.
In 3 days, on February 1, 2023, the Federal Open Market Committee, FOMC, is set to convene. While the market expects rate cuts, some analysts think the Fed will continue raising the federal funds rate. Chris Vermeulen, the founder and chief investment officer of the Technical Traders, insists the S&P 500 is due to slide 37% lower than its current position. Strategist predicts potential market correction as Powell's re-tightening of financial conditions is anticipated.
Markets are closely watching the next Federal Open Market Committee (FOMC) meeting, scheduled to occur on Wednesday, February 1st, 3 days from now. Last week, Bitcoin.com News reported on how investors are closely following the decision of Jerome Powell, the 16th chairman of the Federal Reserve. As the FOMC meeting approaches, discussions about the outcome have been widespread on social media.
A market strategist known as the Carter explained on January 27 that there will be blood on February 1st, referring to the turmoil that markets may face after Powell addresses the nation. While some investors are expecting a dovish Fed and possible rate cuts, Carter argues that Powell will instead continue to tighten and implement restrictive policy.
The analyst notes that Powell has previously referred to a broader tightening project in 3 stages: rapid hikes to reach a neutral rate, measured hikes to reach a sufficiently restrictive rate, and staying at the terminal rate for some time. U.S. Federal Reserve Chair Jerome Powell will re-tighten financial conditions by forcefully addressing rate cuts head-on, Carter stressed in a Twitter thread. The strategist expects that the Fed chair will address this topic forcefully on February 1st and shift the conversation towards how long the Fed needs to hold at the terminal rate and why. Look for him to expand on the lessons of the 1970s, Carter wrote. Why the market continues to punch Powell in the face and not expect a counter-punch is beyond me. This is the craziest market setup right here, right now. There will be blood on February 1st.
Expert predicts 37% drop in S&P 500, while gold and silver set to shine in bearish market. Speaking with David Lin, anchor and producer at Kitco News, Chris Vermeulen, founder and chief investment officer of the Technical Traders, said that stocks are due for a correction.
I honestly think that the S&P 500 could fall another potential 37%, roughly, from current levels, Vermeulen told Lin. That is enough to create a lot of damage, a lot of stress, lots of bankruptcies, you name it, he added. In contrast, Vermeulen expects gold and silver to shine throughout the bearish market. This is when precious metals and miners take off, Vermeulen insisted while discussing market cycles.
Vermeulen is not the only investor who believes gold and silver are set to take off. In December 2022, the manager of the OAG ESG gold mining ETF, Eric Strand, said that gold will see a new all-time high in 2023 and central banks like the Federal Reserve will pivot on rate increases.
It is our opinion that central banks will pivot on their rate hikes and become dovish during 2023, which will ignite an explosive move for gold for years to come, Strand said. We therefore believe gold will end 2023 at least 20% higher, and we also see miners outperforming gold with a factor of 2.
While gold has been on the rise and 2023 expectations are high, Harry Dent, the founder of HS Dent Investment Management, has a contrarian view about gold's performance this year. Dent predicts the yellow precious metal could lose $900 to $1,000 over the next 18 months.
Argentine peso loses almost 12% against the greenback during January, inflation projected to rise sharply.
The Argentine peso has fallen consistently against the US dollar this month, losing almost 12% since January 1. The behavior of the exchange rate for the informal, blue, dollar keeps bringing concerns about a possible escalate in inflation rates, that are predicted to reach almost 100% this year, similar to the rates registered in 2022.
Argentine peso keeps falling. Argentina is currently submerged in a devaluation scenario that has the possibility of causing an escalation in prices this year. The value of the Argentine peso against the US dollar has fallen by almost 12%, reaching a record high rate of 386 pesos per dollar on January 27 in its blue variation.
The exchange rate has been constantly rising since December, when it reached 356 pesos per dollar, breaking a record low for the peso at that time. The government has made movements to maintain its stability, injecting dollars to satisfy the demand of registered importers into the market and announcing a purchase operation of more than $1 billion of its own external debt.
However, this seems to have achieved just the opposite, and now local analysts are worried about the balance of the country's reserves after this disbursement, which would affect the capabilities of the central bank. Maria Castiglione Cotter, head of an economic counseling firm, criticized the measure, stating that it has no sense while the country is facing a budget deficit. Inflation and the coming crises. This continued fall in the value of the Argentine peso is already affecting the prices that citizens have to pay for goods and services, even when the government has applied a series of measures to limit the price rise of several products. Calculations made by private firms predict an inflation rate of more than 5% in January, a high number when compared with countries like Brazil, which is projected to register a rise of less than half a point.
Salvador Di Stefano, another local analyst, believes that the debt purchase operation might accentuate the problems the state is currently facing. Di Stefano stated that this might affect the amount of foreign currency available for imports, causing the economy to slow down even more.
According to him, the dollar will keep falling as the government tries to inject dollars to stop the depreciation of the peso, a similar strategy that President Macri used back in 2018. Also, public spending would accentuate this devaluation, as the government is expected to ramp it up due to the proximity of the elections. Private analysts expect Argentine inflation to reach over 95% this year.
Guys, what do you think about the latest warnings by Rich Dad Poor Dad author Robert Kiyosaki? Let us know in the comments section below. What are your thoughts on the potential market correction? Do you agree with the analysts' predictions or do you have a different perspective? Share your thoughts in the comments section below. What do you think about the Argentine peso devaluation and its effect on inflation rates? Tell us in the comments section below.